So for this we should be less the investment. What are the investment they already did? Investment on marketable security. Marketable security. This should be less because they already invested here. So the 6,500 for the second year, 6,500. What will be the 29,000 less? So we are putting the minus means bracket minus 6,500 is an 22,500. We get the net investment. So we have solved the net investment also. So next what they asked here, what is free cash flow to the firm for the year 2? Firm for the year 2. So next we calculating the fourth one. Calculation of free cash flow firm. So the same as it is particular amount. ನನ್ನ ಮುಖ ಬರ್ತೈತಾ? So here first we should be take the EBIT. So EBIT what we have taken, we have calculated already EBIT or operating profit. So we already calculated EBIT. No, first one here we already calculated EBIT for the year 2. So what is the EBIT for the year 2? What is the answer? 7,200. So we are taking the 7,200. So next we have to be less the tax. What we got the tax here? So we got the total tax on EBIT is 1,840. So total tax on EBIT is 1,840. 1,840. So if we less the 7,200 minus 1,840, we will get the 5,360. We are lessing now, so we are putting the bracket. So we got here the no PAT or no operating profit after tax. So for the next we are adding the depreciation. This is the formula. This is the after the tax we should be add the depreciation is a format. Depreciation, what is that? How much they are given the depreciation amount for the second year? There's depreciation for the second year is 2,200. 2,200 is given for the second year depreciation. 5,360 plus 2,200 is equals to, so we got the 5,560 as a cash flow. We call as cash flow. So next we are calculating the less changes in capital expenditure. Changes in capital expenditure. What are the given capital expenditure? Here the capital expenditure or we call as fixed assets. So what they given fixed asset? They are given the 15,000 and 18,500. So closing balance minus opening balance plus depreciation. So what is the closing balance here? The closing balance is 18,500. 18,500 minus what is the opening balance? 15,000. So plus depreciation. What is the depreciation they are given here? Depreciation is 2,200. So if we calculate 18,500 minus 15,000, if we calculate it, so we get the 3,500 plus 2,200 is an 5,700. We are lessing here, so we are putting the bracket. Now next after this Next we are doing the what we are the net current asset is doing. Net current asset is decreasing, so we are decreasing in working capital, or we call as net current asset. Here if the working capital is decreasing, we should be add it. If it is increasing, 5,000 is there, here 6,000 if it happens means it is increasing, no, so on the time we should be less it. Here we should less, so here it is decreasing 5,000 to 4,000, so it is an adding. So what is the amount? 5,000 minus 4,000 minus 4,000 is an 1,000, so this amount should be added. Here 5,000 closing balance opening balance minus for closing balance is 5,000 minus 4,000 is 1,000. So next after this we should be calculated the operating cash flow. Operating cash flow. What is the operating cash flow means? So we already calculated here. So what we have calculated, 7,200 minus 1,840, we have getted the 5,360. After the adding depreciation 2,200, we have get the 7,560. Till here we have calculated. After this 7,560, so we have to be less now, minus 5,700 plus 1,000. What we'll get? 2,860. So the operating cash flow will be get the 2,860. After this we should be add the, after this we should add it after tax non-operating income. Here what they given tax non-operating income, I already showed there before. Interest expenses as non-operating income, non-operating income as an 800. So 800 into, they are given the 30%. So let me take 1 minus 0.3 or 800 into 100 minus 30 divided by 100. So we can take any one. So what will get? Let me take the 6th one only. 100 minus 30 is an 70 divided by 100. 70 divided by 100, 0.7. So 0.7 into 800, 560. This is an adding. So 2,860 plus 560, we get the 3,420. This is an free cash flow freedom. So we have calculated now the what is the cash flow of freedom of the year 2. So we have calculated. So next they ask you what is the return on investment capital for the year 2. So 5th one, return on invested capital for year 2. Here the formula is ROIC is equals to NOPAT, non-operating profit after tax divided by net investment is the formula for return on invested capital. So NOPAT we already calculated. No? So NOPAT we already calculated. Then we have got the NOPAT here. Where it is NOPAT? Here 5,360 is the NOPAT. 5,360 is a NOPAT. Net investment also we are calculated for the second one. What we have calculated net investment? Sorry, here the third one, net investment we have calculated 22,500. 22,500. So what we will get? 22,500, 5360 divided by 22,500, we will get the 0.238 into 100. If we will get 23.82%. So we have calculated the EBIT for year 2, net investment, free cash flow of the firm 2, what is return on investment capital for the year 2. So we have calculated 5 also. So let me cross check. So calculation of EBIT operating profit or EBIT we have calculated, we got the 7,200. So we have done here. So next, calculation of tax on EBIT. So we got the total tax on EBIT 8,840. So we also done the tax on EBIT. So next we have calculated the net investment. So net investment we have calculated and we got the 22,500. Next we have calculated calculation of free cash flow firm. So particular EBIT operating profit minus tax, no PAT we will get. After adding depreciation we will get the cash flow. After lessing the changes in capital expenditure, 5,700 if we less means. After decreasing, no, the working capital is decreasing, so we are taking the 1,000 is adding. So we got the operation cash flow 2,860. After that adding the tax non-operating incomes, so we will get the 560. Adding after we will get the 3,420 as a free cash flow firm. After free cash flow firm, we have calculated return on investment capital for the year 2. No PAT divided by net investment is the formula. No PAT we already calculated, we got here 5,360, and the net investment also we have calculated 22,500. So we got 0.238. If we calculate to do the percentage as 100, 23.82 as a return on investment capital. So we have done this formula.